Speculation and degeneracy now cover a wide and growing swath of the economy, with crypto, sports betting, and daily options at nearly everyone's fingertips 24/7, 365. The smart money is beginning to follow. That list includes our panelists this morning. Meet Howard Lindzon, general partner at Social Leverage, Roger Ehrenberg, the managing partner at Eberg Capital, and Ethan Ehrenberg, a partner at Eberg Capital as well. I'm Corey Leff, the founder of JohnWallStreet. Guys, it was just a few short years ago that all of these now widely accepted activities were considered taboo and in some cases illegal. Now they're socially acceptable and spurring legitimate business economies and subsequently investment activity. So PASPA's repeal aside, I guess what's changed?
Age before beauty.
I mean, I think the kind of the fragmentation of media and the ability to target niche audiences that actually aren't niche is something that's been a megatrend and certainly jives very closely with the legalization of sports betting and the explosion of the rich capabilities of mobile devices, and it's a new world.
Yeah, so the emergence of streaming technologies aided the growth. Is that what you guys are pointing to?
Well, people have always, looked to take risk in America, and that's manifested over the generations now to the mobile phone. And, there's economic issues at hand too, harder ever to rise up, right, in the industrial type of world. So you take more risk. And so, this era of speculation as entertainment is kind of upon us. We all have our phone. There's less of a stigma about the entertainment of it. You can watch 10 games at once. You can trade, on Robinhood 24/7 or Coinbase. So it's kind of all melded into this, what I call degenerate economy. And I don't mean it in a negative way, like I'm a degen, my son's a degen. Some are degenerates for 10 minutes a day and some are degenerate for 24 hours a day. I recommend 10, not 24 hours, but it's not a negative. I don't say degenerate is a negative thing anymore. It's just a lifestyle.
Yeah, so explain that, right? So what is the what does the concept of degenerate economy mean to you? And being a degenerate, if you will, and we say that lovingly.
I do say it lovingly because my son is a degenerate. He's 24, and I don't bet. So I missed most, Roger and Ethan and Andrew have been showing me, I started a company called StockTwits, so I've seen this behavior over 16 years of building a social network, and a degenerate in '08 was trading triple leveraged XIV, the financial triple leveraged ETF. That was fucking bananas to me in '08. Those people were degenerates in a bad way. And here we are in 2024, and you can go on Better or Simple Bets and bet $10 on pretty much incredibly bad odds. But you get to express yourself in funner ways, and I don't begrudge those people. So the whole thing is melded from Wall Street to Main Street, and kids have all this free time. We put a phone in their hands. They're on Zoom at school. They have 23 hours and 59 minutes a day when they are not stressed or worried or anxious that they can do this stuff.
Yeah, I think that's totally right. I mean, like Howard and Roger both saying, it's just so accessible. You have it right at your fingertips 24/7, and it's so community oriented. I mean, you have just the other day with, I know we're going to touch on this a bit later, but with the Rolling Hills Golf Course, you have a live stream on YouTube with 100,000 people at 11 p.m. on a Monday evening, all watching and chatting and engaging with content. And it's kind of adapted to the point where it doesn't need to be so formal, where you don't have these, kind of talking in a very low, muddled voice. You have these really engaging creators that are now behind the mic that are driving people to engage with this content. And now with the betting piece, that's just another layer that's gonna, get people more and more excited about this sort of activity.
Yeah, I think actually Ethan tapped into something that feeds into this megatrend issue, which is what I'll call the influencer economy. And the fact that a lot of what we're talking about here is built around these personalities that very rapidly have built, tens to hundreds of millions of followers, and they've gotten very sophisticated in how to really engage deeply with their audiences and to monetize them in a whole array of ways. I mean, we just saw you've got, my partner Jake Paul and Better, where I just announced the fight with Mike Tyson on Netflix, of all things. Genius move. And, he's somebody who obviously was a very early YouTuber and kind of figured it out as a teenager, how the game worked. And now, fast forward a decade, and you look at the scale of what he's built with his portfolio, his personal brand, Better, and how those things all work in harmony. That to me is just like a canonical example of this convergence we're talking about.
Yeah, it's a great point. And the other point is customer acquisition. When I invested in Robinhood in 2014, people thought I was nuts. My LPs, I knew immediately when I saw that app it was $1 billion company. This was before unicorns were unicorns, but I understood it from a different standpoint. I had StockTwits, so I knew customer acquisition for them would be $0 versus Schwab and TD Ameritrade paying $150 on CNBC for ads. So I was arbing customer acquisition. In this new era of degeneracy and this influencer economy, if you partner with the right influence, and that with 6% interest rates and ZERP over, and Facebook controlling the pipes, and Apple and Google controlling the pipes, you can end around the whole thing. Like he was just talking about good golf at our golf course, but like Jake Paul and Better, Jake Paul?
Yeah.
And Better, you hacked. Instead of paying $300 a customer, I don't know what DraftKings costs, it's high, I imagine, higher than what Schwab is paying in finance, and you hack that cost to a third or even a half or a fifth, you're in business. And so it's just math, so we have more opportunity. Math drives most of this. There's art, obviously, in what we do. But combine the math and the art in this moment in time where influencers, I don't even know, it's upside down. How much has been spent on Live Tour to go sign John Ram, who I play with. He's at my country club, Silverleaf. And again, he's a freak. It's like Taylor Swift of golf. You go watch him and it's like, oh my God, when he hits a ball, it sounds different than anything on earth. So you go, that's unbelievable. But the point is how much, it's a freak show and it's beautiful to watch. But how about the thousands of other amateurs that if you took the driver out of John Rahm's hand, he would just be a regular golfer that thousands of people could beat, but they can't hit it 330 yards consistently. So you're having all this unbundling, pickleball for tennis, par 3 golf for regular golf, but started as Top Golf. No one thought Top Golf would work. So there's no one knows the answer. And with YouTube and TikTok and influencers, every day I'm blown away and wish I'd got into sports sooner.
So Howard comes from outside the traditional sports investment landscape. So he's looking at degeneracy as kind of a North Star for investment, right?
Yeah.
Roger, do you look at it the same way? You have some more kind of mainstream sports investments. Is this a requirement that has a degeneracy component to it for you to invest now?
I think for me, Corey, the word it's really entertainment is the word that I would use, and I've written this blog post, the entertainmentification of sports that I think you were very early on, but pulls together these threads. I mean, if it used to be if you said sports betting, that was almost by definition degenerate. Now it's social. Now it's entertaining. Now you're hanging out with your friends and you're watching a game. You're talking about what your bets are, and then you're placing your bets, and maybe you're laying your bet off or whatever. So it's become this completely acceptable activity in day-to-day life. So to me, what we're talking about here with degeneracy is now merely mainstream, and it's really no different than when I was a tech VC and doing stuff that seemed on the frontier, but ultimately just became tech investing.
And when I was a kid in college in the 1900s, I freaked out if I saw, because they would yell at the TV Not that people still don't do that, and maybe I worry about that part, obviously, with the son who likes to gamble and vape. And if you're watching, Max, please quit. But he'll call me. He's a good kid. He calls me. He lives in fucking Vegas. And he'll call me screaming about like a 14 parlay. I go, do I even know you? Like, the suckers have all bet. Can't you just live with betting on one team? But that's his entertainment. He goes, well, if I lose $20, I won't buy a drink at the casino. I'm like, what am I going to begrudge him? I'd rather him do that than buy a drink at the casino and overpay. So that's what I mean by degeneracy. It's that. And I don't want my son screaming at the TV. So when I thought of betting as a kid, I thought it was rigged, just like the stock market. I'm like, fucking that guy threw the game, right? But if you're betting in sports or a par 3 tournament, you're not thinking about being the guy's rigging the shot. You're just you're doing it as entertainment.
Yeah, and as we talk about like entertainment, I think it goes along with a concept I always talk about is in terms of like selling the party, right? And we talked about this last night, Howard. The Phoenix Open has become the Phoenix Open because it's become
It's just a regular golf course, yeah.
Yeah, otherwise nobody cares about the Phoenix Open. So I think, again, degeneracy, entertainment, it all goes together, selling the party. That's the North Star that people should be following. Where are we looking within the degenerate, speculative entertainment economy for outsized returns now?
I look to Roger and Ethan.
I mean, to me, it's just getting more pushed out to the edges. Again, I think there's been, tremendous innovation, excitement around the big sports that everybody grew up with, but there's all of these new categories of alternative sports that, to me, represents really a generational chance to own and monetize new IP at prices that obviously are completely unattainable relative to the big four, and the audiences tend to skew younger, and they are more, to them, ingrained in the degenerate economy from day one, so they love, whether it's like World Surfing League as a for instance, or Nitro Rallycross, or even things like X Games, so things that are kind of, across. Some of us grew, it was kind of after some of our time before others. And to me, that is just, we've barely scratched the surface. And as I said at the very top, with the fragmentation of audiences and the ability to go very, very deep with audiences that seemed small and not really monetizable, now with some of the stuff Howard was talking about, and Good being a really excellent example, there are tens of billions of dollars to be had. And it's still so early in the game that from an investment perspective, that's one of the things that gets me excited every day.
So you're talking about new and emerging sports properties, but what about are there underground activities like sports betting that are perhaps still, or options trading that are still kind of?
Well, yeah, I look at the world as a spectator more, because I don't gamble and I don't trade options, but I don't mind talking about it and learning. And we're doing a terrible job in school teaching kids math in the form of betting and in the form of speculation and in the form of risk management. Because kids will learn faster. My son will learn faster. I'll give you an example. He was going to play golf with Dave Finocchio, who started Bleacher Report. And I said, son, he's a great golfer. I said, my son, if I said I was playing with Taylor Swift, he'd be like, whatever, Dad. But he wasn't excited. He was like, he's calling me. He was like, Dave, he started Bleacher Report. So he Googles Dave Finocchio. And he goes, Dad, he's worth 204, because you Google a name and it says net worth, blah, blah, blah. Like I didn't, He goes, Dad, he's very rich. And I go, well, he didn't make $240 million. The company sold for $240 million. Then the VCs take their cut, and his mother and his ex-wife, and he probably ended up with 5%. He goes, oh, $12 million, big deal. But he learned finally what a fucking cap table was, and he's 24 in college.
Nice job, Dad.
So yes, shame on me. But the point is, they're not learning this stuff early enough, right? So better to understand risk and math and how this all works at an early age, especially in a world where we're in, where everybody can start a business. I look at the world from creating language. The next thing in sports is, how do we talk about this in organized, structured data? Not that I'm a data person, but on StockTwits, the first thing our hack was the dollar sign. To get people talking, AAPL means Apple. And then when crypto came out, we came up with $.x, which is BTC.x $. So everybody talks in this language. The next thing that I was talking better and anybody about, because I got to create the language for how people talk about games so they can follow each other and build a network around, education, speculation, so they know who to follow and who's trusted and who's not. So that'll be like a very important next step that gets me excited at StockTwits, because the same audience that will trade a triple leveraged ETF or a mem coin will definitely throw $20 on a golf bet, but they have to know where to find the conversation on that. So that's something that I'm throwing out in the wild that we have to figure out.
Howard, we talked about some adjacencies here too, fashion, technology, things like that, opportunities for investment.
What do you think? I mean, the funny thing is on this panel, the
He
two
knows
old
the most.
guys, the two old guys are far less experienced in sports than this guy.
Yeah.
So,
So go ahead. What do
Yeah,
you
where
In
do you
terms
see
of adjacencies?
to the sports opportunities.
Yeah, I mean, I think it's with consumer and really just this influencer, creator economy, whatever you want to call it. We were just talking about this outside, but whether it's, Logan Paul and KSI with Prime or Good kind of building this really passionate audience and then being able to monetize it by giving you, a good rangefinder that they say is 3% better, but it says good on it. I think that's really a huge opportunity, is to build up these audiences through these media opportunities and then to monetize them with consumer goods.
You guys see an opportunity to reimagine kind of rights ownership, right? Golf doesn't have to necessarily look like the PGA or Live in your mind. So
Yeah.
I guess explain the opportunity to re-envision some of these sports and where you see those opportunities.
So when we just did grass clippings, you can look it up, grassclippings.com. These kids just loved golf, and they used to throw this money game, and COVID happened, the golf course kicked them out, and now they own a par 3 course. When we approached them originally to invest, ZERP is over. We don't have the money to invest $500 million like the TGL Golf League, right? Like, they win. If that's going to work, the money wins that game, right? Like, and I can't compete there. So how do we all compete with $1 million, or as seed investors, we write $1 to $2 million checks? Well, so that's why I avoided sports. I'm like, I thought this was a land of billionaires, which it is. But now with new formats like pickleball or surfing or whatever, an influencer market, we can build a business like we saw what happened with pickleball. Instead of raising more venture capital, we create a league, sell teams, and create like a party event and try and grow the league. It's not so much about winning the tournament and having my team be the champion. It's about all of us working we're reimagining the cap table and how a company is built, because we're not going to be able to go raise $100 million. The art is not to go raise $500 million and sign Tiger Woods. That's not art anymore. That's just money and a commodity. And of course Tiger's got to do that, because Tiger Woods and Rory and Andreessen and Index, they can't invest $1 million. It won't return their fund. It's not worth their time. So we have to reimagine how this is built from the ground up, and they can't compete with us at that level, because they have to turn that deal down because it wouldn't work. They don't want to spend the time investing $2 million.
no, Howard's 100% right, and I think that kind of dislocation is what drives a lot of the way that we think about investing. But I think another point, Corey, that feeds back into how I think sports in general are going to be restructured are athletes as entrepreneurs and athletes owning who they are and not simply being effectively salary people. And whether it's the examples that people like LeBron and Steph and KD and others have set about being super savvy in owning equity in things, not just receiving large paychecks, or the wave of NIL and players now starting to own equity in who they are, starting all the way back in high school and even earlier. But then you say, okay, well, how does that then feed into the influencer economy? Directly. So you're able to build a direct relationship with these athletes in ways that they are now incentivized to engage with because they get the benefit, as opposed to, this is the kind of common thing, college football team has Nike deal, Nike wants a signing event, players have to show up at signing event. players don't get any benefit. They get a little bit of swag. Meanwhile, if you're, you know, playing at a school like the University of Michigan, that is worth a shit ton of money if you were to actually be able to charge for it on an arm's length basis. So I think that realization now is of the power shift in power dynamics is going to be a very interesting trend, and it's not clear to me exactly what that's going to mean for the economics of college teams in particular, but ultimately professional teams as well. With I think there are now players that are saying they want equity ownership in a football team as part of their draft package. Now again, there's huge legal issues with that, but just the mere fact that that's even being discussed is like heresy a decade ago.
You guys have mentioned this kind of influencer economy a bunch of times. Ethan, collectively, you guys have this thesis around the resurgence of a local legend. What is a local legend, and why are they primed to come back? Go ahead.
Yeah, I mean, I think that feeds right into what we're doing with Rolling Hills and what Howard's saying kind of about this guy that, might be known in this really niche community, and now he's able to monetize it in a way that he previously wasn't able to. Also, just in terms of local legends, one league that I would shout out is the UFC, and I was just reading an article actually about how they've been able to kind of build these massive markets around specific individuals, whether it's Cyril Gane in France and kind of building around him, or Wei Li in China and building around her, or Adesanya and Usman and those guys in Nigeria. They're able to really focus on an individual and kind of build out their story and then go into that market and really sell around that. But I think now with kind of all of these different ways to access media, whether it's Twitch, YouTube, TikTok, or otherwise, there's the opportunity for these individuals to really build massive influence in smaller communities and then in turn monetize that.
The PFL did the same with Cedric Doumbé, just sold 16,000 seats in France. So same concept.
Just one thing, the local legend is important too as it applies to who I'm investing with, right? I'd rather invest with a local legend than LeBron James. Why? Because LeBron James is not going to negotiate the same terms because it's his money versus me who manages Rodgers and other people's money. I don't have to just get in the deal. Like, we've lost our minds. Like, we need to do deals that make sense, right? And so you got to know what weight class you're in. And so at Rolling Hills, we partnered with Short Game Chef. I honestly didn't know who the guy was. Great name, maybe, on Instagram. He's got like 400,000 fucking followers. That he's the wizard at teaching short game. People fly in to get short game lessons. It's that particular. So I'd rather partner with him than LeBron at our golf course. Because he's a draw for that. And people will come to see him do that thing. And
he's not going to ask for 10% of the business.
Well, he did, and I said, fuck off. You're just a short game chef. You're not LeBron James. No, I'm kidding. But the point being, LeBron's not valuation sensitive. And we have to be careful teaching these athletes, or they're going to learn it themselves, that just getting in the deal, like 2010 to 2020, taught a lot of incredibly bad habits. And we're all guilty of chasing things. And we're going to live in a world where we're in a world of abundance of capital, but that doesn't mean your money's good at whatever valuation. There is an art to structuring companies, and local legend, including local legend on venture capitalists, like people that do their job as a craft, are more important than just blunt money from A16Z. So you got to be careful who your partners are and how you structure deals in these things too, right?
Roger, we only have another minute, so I wanted to jump in here. How does betting fit into the local legend concept?
I mean, to me, it's literally
Commonwealth.
Similar to what these guys said. Yeah, I mean, Commonwealth is a really interesting story where kind of building excitement around these athletes, and again, Commonwealth started with horses, but now golfers and ultimately tennis players, college football players, et cetera, where you're actually able to own pieces of their futures and
cheer them on
and build that tight connectivity, have the special relationship, and those values can go up and down.
What about Calcutta betting and that kind of activity?
Well, that's his specialty.
Well, Calcutta betting just means instead of me, like we own a golf team, so instead of me playing, I couldn't win, but I have the pride of ownership, and then we can bet against other friends. And so Calcutta betting is going to be a massive golf thing, especially around Team League. But that's just speculation on my part. We're still very early days of that. But Calcutta betting's been around forever, and it's a really fun, inclusive way that even if you're not going to win, you know you can't win, you can try and handicap the rest of the field. So it's exciting.
We're at time. Thank you guys so much for the time and insight this morning.
Yeah.